Welcome to Cake on Tuesday, where we spotlight the rule breakers, the underdogs who refuse to listen when everyone said it won't work. I'm Elizabeth Bieniek, and for the next 20 minutes, we're diving into another disruptive innovation story that proves sometimes the craziest ideas change everything. Today's guest is Chris Miles, founder of Money Ripples. After starting his career as a financial advisor, Chris became disillusioned by the broken financial industry. He then went on to build multiple streams of passive income and retired twice before age 40. Now, as founder of Money Ripples, author of Work Optional Blueprint, and host of the top-rated Money Ripples podcast, he helps clients create financial resilience through immediate cash flow and long-term passive income. Featured in CNN Money, Bigger Pockets, and Entrepreneurs on Fire, Chris reveals how to stop working for money and start living free, wealthy, and abundant. Chris, welcome to Cake on Tuesday. Please start off and tell us a little bit about what do you love about what you do? What absolutely sets your soul on fire about it?
I actually, I retired twice by the time I was 39, and I'll tell you, every time I got depressed. And so what lights my soul on fire is I love serving. I love teaching. I mean, that's the thing I've always loved. And that's why I do what I do, even right now with Money Ripples. I even used to be a ballroom dance instructor a little bit. I mean, if it deals with teaching and if it can bless somebody else's life, that I love it. I feel like that's what we're here to do on the planet. We're here to create a ripple effect through people's lives.
I love the fact that you're practicing what you preach here of you're working because you want to, not because you have to. And we had a chance to chat a little bit before the show. I love the kind of impetus story behind you started out as a financial advisor and then basically found, I'm not going to do this. I'm going to be the anti-financial advisor. Can you tell us a little bit about that story that flipped that switch for you?
Yeah, I mean, I was the financial advisor that drank the Kool-Aid. I was 24, I got in that industry and I was all about, set it and forget it, to slave and save away, right? And eventually, if you just keep saving for decades, down the road, if you do exactly as I say, you'll have millions of dollars and you'll be financially free. But 4 years into it, my dad reached out to me and he says, well, Chris, when are you going to advise me? And I understand that my dad was a penny pinching saver, like post-depression era kind of guy, threw away nothing. I'm now throwing away all of his junk. But while he was alive, he threw away nothing, right? He was always like, get everything on sale. You would save everything you could, no debt, that kind of thing. And so when I sat down with him, I looked at his finances for the first time and I saw that he had paid off his house early. So he was 100% debt free. He stuffed money in his 401k, getting that company match like every good boy should. And then as I look at everything, I said, Dad, you're 61 years old. I know you want to retire because the job you say is literally killing you, right? But the thing is, if you try to retire today, you'd have to die in about 5 or 6 years because you'll run out of money. He said, well, that's not what I want to hear. You're supposed to tell me how I can retire. I said, I don't know. Honestly, you did everything right from what I teach as a financial advisor. In fact, I'm on the same path as you are. I'm doing the same things that you've been doing, and apparently it's not working. And so I just told him, I guess you just have to keep working, keep working and save longer. And he did. He worked until his 70s, until he was pretty much health reasons, forced in retirement. And he got a few good years where he got some karaoke singing in, but really most of the latter half of his retirement was spent bedridden, and being cared for, by caretakers and stuff. And so he was alive, but he never really got to live, if that makes sense. And that disturbed me, not just what happened in the future, but the fact that I couldn't give him an answer when he was 61, it bothered me. And about a month later, this is at the end of 2005, about a month later, I called up a friend of mine who used to work for me as a financial advisor, but then he quit on me to go do real estate investing. And so I called up, I was hoping he was failing at real estate investing. That was my secret wish, as I was wanting him to come back to work for me. So I was checking in on him. But when I called and asked him how he's doing, he says, Chris, my life's awesome. My dad and I have partnered on some real estate deals, and we've now doubled his income as a professor at the local university. I said, wait a minute, you've been doing this for 5 months? Come on, that's too good to be true. There's no way that's possible. At least
What's
for
the
a financial
catch?
advisor to believe so, right? And he finally just said, well, Chris, let me ask you a question. How many of your clients are actually financially free where they're not worrying about money? I said, well, they all worry about money. Even the retired ones worry about running out of money too soon. So none of them are free that way. He's like, okay, great. You're honest. I didn't expect that. How about this? How many of you guys as financial advisors are financially free not off the commissions you're earning, but actually doing these investments you've been recommending. And there were guys that have been working in my office since the 1970s. And I said, I don't think any of them can. There's your problem. And so I kind of took that matrix red pill, started going down that little rabbit hole a little bit, right? And I started to realize that it wasn't about the accumulation theory that I was teaching, which was just save and save and save, build up that huge nest egg, and then live on less than the interest of like 3% or so, right? No, it was about how do we create income? And when I shifted that perspective, I started to realize, like, wait a minute, I can do things with my money, and not in Wall Street, but on Main Street, things like real estate and business and things like that. I was like, wait a minute, I can actually put my money with somebody and they will pay me like 1% a month on my money, because they're borrowing my money. I'm the bank, or something like that. Or I could, do rentals or whatever it might be. And the next thing I know, later that next year, after I quit, because I couldn't keep being a financial advisor knowing what I knew, I had to keep my integrity intact, so I quit. I actually vowed never to teach about money again, ironically. I said I'll just teach ballroom dancing and do mortgages, but I was learning real estate on the side, and eventually that got me to the point where 28, almost 29 years old, I was financially independent. I had enough passive income coming in. I could work because I want to, not because I have to, or as I refer to it, work optional. And despite 2007, of course, I came out of retirement, started teaching people how I do what I did, because I can't just do nothing, because that's boring. But I did it. And then, of course, 2007 is right when the recession hit. And we were focused on real estate investors, flippers, and they were going broke. And so as a result, we were going broke. And I went from financially free to now over $1 million in debt in the hole, big time, and had to dig out of that debt hole. It took a long time. But eventually by the end of 2016, I was able to do it, where I became financially independent the second time by 2016. And so that's really what I've taught people to do, is how do they do the same thing I did, which is create enough passive income where they work because they want to, not because they have to.
Hmm. And we talked about this concept of financial resilience. And so you mentioned you retired twice. So the second time, I'm sure you're focused more on being resilient across the, risk proof, and that's
Yeah.
something you work with your clients on. What does financial resilience mean to you? Because I've been hearing this term a lot lately. It's come up in a lot of conversations. It seems very top of mind right now with everyone concerned about cost and inflation being rampant and whatnot. When you hear financial resilience, what does that mean to you?
There's a book out there called Anti-Fragile, that talks about that trees that are strong aren't strong because there wasn't resistance, right? It's because they were resilient, because they were able to weather the storms, literally, right? They grew deep roots, and they were able to stay firm. And it's not that they stay firm to the point where they're rigid, right? Because anything that's rigid will break. But if you can be flexible and bend with it, it becomes better. And that's what I see with the financial aspect too, is that I refer to as being really having optionality. How can you have more options? What I've learned over the years is that financial freedom doesn't come from just having a lot of money. In fact, that doesn't usually do much of at all. It's never about the money. It's about how can we create more options? Because the more options you have in your life, the more free you can be. It means that you can be flexible. If things start to change the environment, you can adjust and change with it and be okay. That's why I think it's so important to have passive income, because so many people focus so much on that someday, 40, 50 years from now, right? Eventually someday, assuming it even works, which my dad found out pretty hard, like everybody else is finding out, it doesn't work. That's the scary part. And so they find out too late, and then they've run out of options because they've run out of time. And that's what you don't want to have happen. That's why I love, my sign says, live your life now, not tomorrow. It doesn't mean eat, drink, and be merry because you're going to screw up your life or whatever.
Have
No,
your cake
it
and
just
eat it
means,
too. I mean, eat cake for tomorrow we die. I think we would work a few sayings in there.
yeah, you have a little fun, of course, right? But yeah, but I mean, don't mess it up. Don't be unresponsible or unwise with that freedom, right? But yeah, that's why creating passive income now is important. I was sharing recently with somebody where one of my clients, he worked for Hollywood, right? If you talk about having disruptions and having to be resilient, just get a job at Hollywood, because he was a set designer, and he started working with us in 2019. And so he only had $250,000. It wasn't like he had a lot. It wasn't like he had millions just falling out of his pockets, right? He just had $250,000 that was in the stock market. He decided to cash in his chips, and specifically in his case, he bought several what we call turnkey rentals, which are rental properties where you don't manage it. Like, there's companies that help you find the properties, even if it's across the country, which, him being California, of course, there's nothing good in the West. You have to go out east to find something decent that pays you cash flow. And so he bought a bunch of properties out east with that 250,000. When 2020 happened, as you know, half the year, Hollywood was shut down.
Right.
And during that time, like he was very grateful because even though we had a cash reserve for him, which helps too, you got to have that emergency fund, right? I've been recommending, by the way, especially in today's economy, not 3 to 6 months like every other expert says. I've been recommending at least 6 to 12 months. If you're a business owner, 12 months minimum, you know? But and he's the same way. So I got him prepared that way. Make sure he had a emergency fund, and he had passive income coming in. So when his income stopped, the great thing is he still had income coming in, right? Which allowed his savings to stay together longer. So it stretched out. So when Hollywood did open up again, he had a lot of friends that they went and chased whatever project, even if they were under bad working conditions, they would take anything. He was able to be more selective. He was able to say, you know what, I could get that job right now, but I know that's going to be hell, right? Like I want to do something that actually is better. And so he waited for the right jobs. And then, of course, 2023, half the year shut down because of writer's strike, you know? And so he was out of work again. Same thing. So even though he had all these hiccups, and it did slow down his cash flow increase as time went on, still it increased slowly as it went along. He's now at the point he's got about 4,000 a month coming in. His goal was to have 5,000 a month. He's like, that's really what I need is $5,000 a month, then I'm good. And I actually just showed him a few months ago. I said, hey, actually, if you sell off this rental property you've had and go and do this instead, you could actually hit that $5,000 a month goal. He's like, all right, well, cool. And that's why I realized that cash flow is everything, right? Cash flow is
Yeah.
what creates more options. With more options creates more freedom.
Yeah. So you mentioned the fact that you started out as a financial advisor and it became very real and very apparent to you quite quickly that a lot of the advice we get, it's not going to give us financial or life option freedom that we all desire. I feel
Mhm.
like this is something that's very, again, very top of mind right now. And I think a lot of us do feel a little bit jaded of like, but I was told work hard, save your money, and you'll be fine. Do you feel like something changed along the way, or was that just never the right advice, or how did we get so wrong?
Yeah, I mean, it's one of those pieces of advice. It's not like it's the worst thing in the world. It's kind of like it's not like good or bad. It's like good, better, best, right? It's more like that. It's good to have that discipline to save and to live below your means and everything, not within reason, right? Don't live on rice and beans and cut out all joy out of your life like some people have you do. But there's got to be that balance. And so what's really happened over the last several decades, especially starting in the 1970s and 1980s, is that Wall Street got big thanks to the baby boomers, right? Because understand that 1970s was a hard sell even for financial advisors because in the 1970s, the market was flat. Actually, really from the late 60s until the early 80s, the market went nowhere, much like we saw in the about the year 2000 through the year 2013. Like it was flat. The market, you didn't make any money in the market. So, but the difference is that people have been nowadays, even in the 2000s, been told and led to believe that the market's going to save you. And that's because all the money, all the financial education you receive are from big companies like Merrill Lynch's, Goldman Sachs, right? The Fidelities of the world. Those are the ones that are telling you what to do with your money. And then they have their pawns, which are their financial advisors, which is what I was, to tell you to do the same thing. I was taught, for example, that if I were to peel back the curtain a little bit, I was taught that to teach people the three T's, that they lack the time, the training, or the temperament to do their own investing. Therefore, they should just trust us, right? Just turn it over to us. I mean, you hear about it. I mean, it's not hard to believe. I mean, if you think about the rules of the bank, right? Like, or any financial institution, they want your money as often as possible. They want as much of it as possible for as long as possible to give as little back as possible. And they want you to take all the risk because high risk creates high returns, even though they take none of the risk because they realize that that's false. By the way, high risk creates high returns. You ever thought about that? Risk, the definition of risk is chance of loss. When does a higher chance of losing equal a higher chance of winning? 90% chance of losing does not equal higher 90% chance of winning. But that's what they've taught us, right? If that were the case,
Right.
I should just go buy a bunch of lottery tickets, cash out the 401k, and we're good. Let's go. But
Just to be
but
clear,
we know
Chris is
that's
not
dumb.
giving that as financial advice right now.
Yeah, exactly. Yeah, that's not the advice I'm telling you to take. I'm just talking about the irony. If you're going to
Right,
fall
right.
on that lame advice, that really that's out of alignment. That's completely violates all principles right there of real
Yeah.
nature, of actual logic even. But that's what we've been led to believe because it's been taught for so long. People will tell me, "Hey, Chris, I'm a conservative investor." I said, "No, you're not. You're a comfortable saver." You're comfortable going with the masses. But when have the masses become financially free? Wouldn't you think it would have worked by now? Like, well, it is working. Says who? The financial advisors? Really? Like, are you seeing lots of articles, people saying, yeah, that 401k got me on the lifestyles of the rich and famous. That 401k got me, the guy that does the interviews at the School of Hard Knocks, like, yeah, you're a millionaire, multimillionaire, right? How'd you get wealthy? I saved in my 401k. Said no one ever, right? It never happens. And here's the reality. Fidelity, they come out with their numbers every year. Look it up. They've got 1.1 million 401k, IRA, or 403b millionaires. 1.1 million, but they have 53 million clients. That means out of all of their clients, only 2% have over $1 million. But that same 2%, they were interviewed by Transamerica in a separate study in 2023, asked them, how many of you, like, how do you feel about retirement? 35%, more than one third said, it will take a miracle for me to be able to retire. They
Wow.
actually don't think it's possible. And you think, wait, these are the poster children, the people that should have figured out. But no, the reason is because you've been told, like the people used to say the whole 4% rule, like, whatever you save up, you can live on 4%. That was debunked a long time ago. That guy created his numbers between the years of 1926 and 1976. A lot has changed. People live longer and inflation's bigger because we're taking off the gold standard in 74, right? So as a result, like we have bigger inflation. It's now a 3% rule if you're in your 60s. It's only a 4% rule if you wait till your 70s. So think about it. You have $1 million saved up. You're one of the few, the proud, the millionaires, right? 401k millionaires, and you can live on now 3% or $30,000 a year, $2,500 a month. You're now living below the poverty line as a millionaire. You're a broke millionaire. This is why those people say it'll take a miracle for me to be able to retire, because you got to have multi-millions saved up, which is even a smaller percentage. So if it really did work, and I guarantee there's more than, of these people. Here's the thing. If you have a 401k, right, you're probably most likely already a saver. You've already been following Dave Ramsey's advice for years. You've already been doing this stuff and it hasn't worked yet. Why would you expect it? And by the way, we're also at the best stock market period we've seen in our entire lifetime, really in the entire stock market history. The last 17 years, only 1 year was down in 2022, and it was a blip and people don't even remember it, right? We've had a 17-year bull run. That doesn't happen in history. It doesn't work that way, right? Like usually we're used to 5 years up, 2 years down. We're overdue for a massive correction. And so this is as good as it gets. And still less than a 2% success rate when you factor in the people that don't even think they'll retire anyways. Should we look at maybe doing something different? That's my argument.
Yeah. Well, it's a good tee up of a problem. My guess is a large percentage of the audience just had a major panic attack thinking about 401k as their only investment strategy. So for those of us that might be in that bucket, what's the advice that you give to start? If you're just like completely overwhelmed, everything I've always been told is going to work, I'm realizing it's not going to work. Where do I even start?
Well, this is part of the blueprint that I teach that works every time, right? It's a 3-step process of get lean, get liquid, and get out. So get lean means you track your money, you watch how much is coming in, you get rid of things that don't really serve you. Doesn't mean you, again, live on rice and beans, right? You're not cutting everything out of your life, but still be a wise steward of your money. That's get lean. Get liquid means instead of locking your money up in prison, which is the number one thing that financial advisors have been telling you to do, prison means lock your money up in 401ks that you can't touch unless you quit your job or get fired. We don't recommend it. And not advice, right? For more financial advice, follow me. Yeah. So, you have to like either quit or get fired and or retire, right? And you have
Right.
to wait till you're 60 to pretty much do it. So that's a prison. Also, your home equity is a prison. I found this out in 2007 and 2008 when money was getting tight. I had lots of equity in my property. That's the thing. People are like, oh, you're over $1 million in debt. Well, I didn't start there. I got to $1 million in debt. That was the effect of bad cash flow, because pretty soon, if all of a sudden now my business is losing money and now I'm not paying myself at home, it doesn't take long for like bills to start racking up both in the business and at home. And plus, it didn't help that all of a sudden now we watched values drop, stock market values dropped, real estate values dropped, all that happened at the same time. So that's why I became $1 million in debt. Now, my net worth wise, it wasn't $1 million, right? Like I was able to sell off things and pay off a good chunk of it. But still, I was heavily in debt, because of it. And I wasn't liquid. I had all the equity in my property thinking I could get to it whenever I need it because I was a mortgage broker. They'd take anybody with a heartbeat. and a good credit score. And then I find out, no, even if you have a perfect credit score, they still won't give you the money during hard times. And so I realized if you want to be resilient, have that money in your possession. Now, even if it's in a simple savings account, I would have been better off. I would have weathered that storm better if that money would have been in cash versus in equity in my house. And that's one of the big things. So getting liquid is very important. Get your money out of those prisons. If you can, just like that client of mine in Hollywood, he got his money out of mutual funds, a quarter million, to then do the third thing, which is get it out. That's where you get it out into investments that then pay you income now versus waiting 30, 40 years to get paid on it. And that's really the secret. I mean, if you can find anything to do to turn your net worth into income, that's what's really important. By the way, there's another lie that you've been told, that your net worth is a measure of wealth. No, it's not. Like, it's just the effect of wealth. If you have positive cash flow for so long, you will have a growing net worth. If you have negative cash flow, you'll have a shrinking net worth. It's pretty simple. It's a simple equation. It's cause and effect. But everybody tells you, oh, have this big net worth. Because again, they tell you to lock your money up in their retirement accounts, let it sit there, pull off less than the interest, so then they always get paid. Remember, they're making money off your money. That's why you've been taught that for so many years. So get out of that accumulation mentality and get into an acceleration mentality of get lean, get liquid, and then get that money out working for you.
Gotcha. Okay, so Money Ripples, your anti-financial advice company. What is now your definition of success in this company now that you are doing this because this is a passion project? This is because you want to, not because you have to. So what does success look like for you with Money Ripples?
My biggest thing are trophies. Well, and trophies for me, right? I'm not talking about like, the stuff I get like when I run my marathons, right? Nothing like that, but like for me, like the trophy is changing somebody's life. If I can see their lives getting better, that's big for me. Like for example, I had a client from, this would have been now 5 years ago. So this is right after 2020. He was in California. He had $1 million in his retirement account. And of course, his financial advisor told him, as he's like so excited for retirement, having $1 million. I mean, he did it. He's one of the few percent. And the financial advisor told him, congratulations, you can now live on $30,000 a year. And he said, okay, that's not what I wanted. I live in California. 30,000 is almost homeless. What do I do? And the guy's like, well, just keep saving. Same thing I said to my
Yeah,
dad, right?
right.
And so he's like, no, there's got to be something better. And so he started searching around, listening to podcasts, found my Money Ripples podcast, and then he reached out and became a client. And what ended up happening is that $1 million, instead of just being locked up in mutual funds, he got it out. He got it liquid. And then he got it out into other investments. Like he bought a couple duplexes that he doesn't manage. He has a property manager that does it all for him. In fact, the property manager is the one that helped him find the properties. So he didn't have to go hunting, trying to find the right deal. It was already served up to him on a platter like a buffet, right? So he got a couple duplexes. He did some apartment investing and things like that. And he even got in some oil and gas investments. So he started getting these multiple streams of income from different non-correlated assets. And he went from that 30,000 a year, what he was supposed to live on, to over 130,000 a year as a result. And what was interesting is just last year, I got a text from one of his best friends. He says, hey, I just want to let you know, Dan passed away this last Monday night, heart attack just at his desk. He was only 64, passed away. He's like, but I want to let you know that even though it wasn't like you guys talked every day, like it was only on occasion, he's like, we talked about you a lot. And the fact of the world you opened up for him, like he was very, very grateful for it. And he talked very highly of you. He took his kids with him to some of these investor type of conferences. Like they were learning about oil and gas and things like that. They're in their 20s just so because he wanted to create a legacy with them, right? And that meant the world to me, that it wasn't just like, hey, cool, thanks for becoming a client, right? Like it wasn't transactional. It was literally like we were changing his life and creating a ripple effect through his family's life too. And that's kind of, again, come back to full circle what I do, right? Like, I mean, I had a couple that they didn't do any investing, right? They were just tight on cash flow. And they were a chiropractor up in North Dakota. I have other clients in Minnesota. They were in North Dakota. And we eventually found some things to do. We could help them save on taxes because we do cash flow analysis on other things. So we saved them on taxes, helped them, find ways to like kind of pay off certain debts, and keep other ones. And by all the maneuvering we did with cash flow on their cash flow side of things, we freed up $6,000 a month. And with that $6,000, the very first month, his wife says, we bought a four-wheeler, a $6,000 four-wheeler. She's like, but Chris, I know everybody would judge us for that. She's like, I know you won't because truth is, like, nobody's been worse financially. Very few people I ever met are been worse off financially than I've ever been, right? So I can't judge. But they're like, but they said, but here's the thing, that four-wheeler, you got to understand, my husband up to this point didn't feel like he could take off a weekend. Like he would work all week long and sometimes into the weekends, and he would be exhausted by the weekend. So we wouldn't really get our full version of my husband or my kids' dad. But with that $6,000 a month, now he feels like he has permission to be able to say, I can relax on the weekend. I don't have to slave away. And so she's like, he's out every single weekend with my kids, riding that four-wheeler, having fun. You got to understand, my kids got their father back and I got my husband back. And that's kind of why I do what I do. Is like that for me is like my trophy, is that I can see those people's lives and it's changing. And so at least I'm not wasting my breath and my time doing what I'm doing. And I could literally be sitting on a beach, having a very less stressful life, right? But at the same time, it's that reward that comes from being able to bless more lives, because I feel like that's what I'm here to do. Like, as long as I'm on this planet, how can I benefit more lives? And I think that's really all of our mission in some way, shape, or form, is how can we make this world a better place by being in it? And we leave the world a better place than when we came to it.
Amazing, Chris. That's an amazing note to end on, too. So if people want to find you, learn more, follow you and your amazing work, where do they find you?
Anything that's Money Ripples, whether it's moneyripples.com, there's at Money Ripples on social media, even at Chris C. Miles for personal Instagram and stuff. Or you can just follow our Money Ripples podcast on any podcast platform, including YouTube.
Awesome. Thank you, Chris, so much for being here.
Thank you.
Thanks for joining another Cake on Tuesday celebration of beautiful disruption. Please share it, review it, and find more innovative stories at podcast.cakeontuesday.com. I'm Elizabeth Bienik. Be bold, stay curious. Now go have some cake.